Hey all, Choiboy here. Welcome to another video. Today we're going to be talking about stock picking 101. What you should be looking into when you want to pick your own individual company stocks. Now, I wanted to make this video because I've been seeing a lot of people on the internet and around me as well where people are buying stocks without any research, just randomly picking ones, buying it because their friends bought it, buying it because they just know the company but don't know how they operate, anything like that. And it's very dangerous when you invest like this. Sure, you might have a few flukes here and there, especially with nowadays the market trend is was at least going upwards and it's just plateaued a bit. What will happen when the market falls, when the general market trend goes downwards again? A lot of people will be very sad because they bought because of hype, because of random just gambling style of investments, and it's not really ideal for most people. And in fact, Warren Buffett says something like stock picking isn't for everyone pretty much, and for most majority they should be just doing funds and a dollar cost averaging on that because they just don't have the traits to invest in individual company stocks themselves. There's a lot of time and effort to pick out good stocks, and funds do average around 7.5% annual returns over a long period of time. And most people who do stock picking themselves will not even perform as well as a normal fund. It's because people don't really look into company stocks seriously, and it's really important. So hopefully my presentation here today helps you pick out stocks in a more, logical and rational way. A bit of research, a bit of thoughts, put into your decision of buying a stock. Disclaimer, I'm not a financial advisor. This is not financial advice. Please do your own research. I may miss some things, or I may have things that you might not align with, and that's totally fine. Just filter it out while you're watching this video, and hopefully you can take out the bits that kind of make sense to you and use it for your future stock picking. So let's get straight into it. Before that, let me have a sip of my coffee. Let's go. Presentation. Number one thing you should be looking into when stock picking would be financials. Very important. Even Warren Buffett says financial reports should be your second language, right? It should be natural to you. You should be able to look at a financial report, look at the income statement, look at the balance sheet, look at the track record, look at the ratios, and make some kind of sense of what the business is doing in terms of numbers. Numbers are very important for a company. Unless it's a non-profit, you want to make profit, and that's why you run a business, right? It's really important you understand these numbers. I'm not going to go into any of these too deeply. It's not a video about teaching you how to look at financials and what is what, but I wanted to kind of give you a rundown of the things I look into when I do financial kind of analysis. Now, first of all, when you look at the financial reports and stuff like that, you first look at the revenue and the earnings and stuff like that. It's very simple. Revenue is the total money you bring in, and the earnings is pretty much the profit. The profit margin for each company or each sector is very different. It's due to the operating cost and the kind of sector they are in and how they scale, and everything comes into play when you talk about profit margins. And for example, retail companies normally have a lower profit margin, and a tech company normally has a pretty high profit margin, and that's because, mainly speaking, retail needs land, a lot of people to operate and scale the business, whereas a tech company doesn't need land or anything like that. There's nothing too hard about it, especially nowadays with cloud. A lot of things are very easy to make compared to the back in the days. Everything, you just put it into the cloud, you develop on it, you make some processes and automate things, have monitoring systems and stuff like that. Those are much more manageable in terms of numbers, and they do cost quite a bit, but not as much as land and hiring people, a lot of people to work in each kind of store and stuff like that. It's just really different business models, and therefore the profit margins are very different. So you need to think about those kind of things when you look at the revenue and earnings. Balance sheet, you're looking at like the assets, the debt, the liabilities, all that kind of things, and you pretty much trying to balance out the two sides. For example, there's a thing with like equity and debt, and a lot of people might think, hey, having debt is bad. Sure, but Tesla has a lot of debt. Stock prices still go up. Not really the case all the time. You just got to really know if the debt is reasonable and if it's going towards a good thing for the growth of the company and stuff like that. You need to make sure the money coming in will over time, take care of the debt. If it's not making enough money to take care of the debt, then obviously there's some problems here. So these are the kind of things you're thinking about. And equity is kind of like the shareholder monies and stuff like that. When the company does like capital raises, for example, then they get equity and pretty much they put it into their balance sheets because they want to kind of balance out their balance sheet pretty much. The amount of assets they have and amount of liabilities they have and stuff like that. So those are the kind of things you really need to look into and how they all kind of relate to each other. Dividend history or like financial track records is really important. For example, if a company has been paying the dividends no matter what consistently over a decade or two, then normally that's a pretty good sign. If they've been paying dividends even during the previous GFC, or for example, that's really good as well. So these are the kind of things you're looking into to see how resilient the business is and how solid it is. That's a very good factor normally, and keeping that consistency is very important. Consistency is the best thing for a business. Having a very volatile business is not really a good thing, and a peak and a off peak off peak, that's really not the thing that personally I would go for, but I would go for more consistent growth or something like that. Consistency is key. And the king, PE PB ratios, these things also depend on the sector they are in and the kind of the size of the company. And for example, having a high PE ratio normally means it's quite overbought, and having a really low PE is normally meaning it's quite oversold. But that's not always the case, and just because the PE is very high does not mean it's going to come down anytime soon, and just because the PE is low does not mean it was going to go up. So these are the kind of things that you really need to understand. And the PB ratios, if they sold everything in the company right now, how much is it going to cost? Comparing the book price of the company to the market cap is a very interesting thing to look into and stuff like that. So these are the kind of things you want to look into in the financial side. There's probably quite a few other YouTubers out there that can talk about financials more. For example, Joshua Wang is a really good one. Hopefully he comes back with videos soon, but check out his channel and subscribe to him as well. He makes really good financial kind of videos about company stocks. Check out his channel. So that's pretty much it for the financials of the company. And once the financials are fine, then I start going into the other things. So number 2 is the products and services. Pretty much, does the product have a purpose? What kind of features does it have? The pricing. It's kind of hard to know the pricing if it's a B2B kind of product, for example, a business to business. But if it's something that the public can consume directly, for example, Kathmandu, they sell clothes to people. Looking at if it's fairly priced or not is a pretty good thing to look into. And for the product side, if it's a public thing that the public can consume directly, is it something you would use? It's really important if it's something if you would use or if a lot of other people would use. That's really important. And investors normally like to buy stocks of what they would actually use themselves. I think that's a really good reason to buy a company, is because you like their product, and that's a really good reason to buy a company stock. So that's the second one. Third one is target audience. Who are they targeting? What is the reach potential, the niche markets and stuff like that? Is it targeting a specific age group? Is it targeting a certain kind of people? For example, Nike and Adidas is a lifestyle and a lot of sporting kind of gears, so it will target the people who love to do sports, or love sporting brands, stuff like that. So having a broad target audience is normally, it's a pretty good factor, and it's really important that the reach potential can be maximized, because the more people you can sell your products to, the better. And this is why niche markets normally have a harder time to scale, because they don't target a wide audience, they target a specific audience. For example, vegan or vegetarian businesses only target vegan and vegetarians. Therefore, all the people who eat meat, not necessarily too keen on the company, or the company is not really targeting for them at all. So that's the kind of things you need to think about, and looking at the competition around the company and seeing if it can actually dominate in that niche market is a really good thing to look into as well. But even for general kind of brands, is it the target audience and having the reach potential maximized is very, very important. So that's probably the third one. And the fourth one is the business model. Is their business future proof? How do they make money and revenue to expenses and stuff like that? How do they make money? How do they spend money? And if their model kind of reflects well into the future. So it's really important you look at the business model. For example, and personally I think a Sky TV is quite a failed business model. So probably not failed, but it's quite an outdated one, right? They kind of jumped on the streaming side a bit too late. Their pricing is a bit high as well. So this is really important. Business model is kind of hard to analyze at times, especially if it's not a obvious one, but this is something you can look into. Hopefully there are a few things here and there in the financial reports and stuff like that that might give you hints on the business model, and if it's fitting for the future, because it always has to be future proof, it has to be ahead of its game, all that kind of stuff to dominate the market. So that's really important to look into. Number 5 is brand reputation. Are they well known, and how do people view them? That's really important. Are they well known? For example, Nike, Adidas, as I mentioned before, very, very well known. Most people know it, even if they're not really into sports or those kind of clothing gears. They have that exposure. And what do people think of them? It's a very mainstream brand, so normally people have a pretty good view towards these kind of companies. So that's the kind of thing you'll be looking into, because the more people who know the brand and use their product is very, very important. And if they love their product, then you normally have a really good business. So that's really important to look into, is brand reputation. How is the brand reflected amongst others and the public? So that's the number 5. And number 6, and the final one, is the culture of the company. There's a lot of things you can look into for the culture. It's not very, very obvious, especially for some companies, but generally how I look at it is the company internal and external culture. So what do they have inside the business, so for the employees, and what do they have it for the ecosystem of their brand, pretty much. So that's the external culture. Do they invest in their employees? Taking care of the employees is very, very important, and people who love to work at the company come up with better ideas. Pretty simple, but not always the case. So that's something you might need to look into. So that's the kind of thing that might not be so obvious, but it's really important you look into that. So then you'll look at the passion they have for what they do. So passion to build the best clothing brand, or the best retail brand, or the best logistics, whatever it is. Do they have passion in what they do? And normally you can tell by their websites, maybe some interviews with the board or the exec members, podcasts. I don't know, a way to kind of see if they have passion for what they do is really important. And even the way they, you know, create the products, the design, the motto, the stories, those all kind of show passion towards their product they're making, and that's really important to look into. And finally, what do they do for the community? There's a lot of things companies can do to help the community. For example, get their employees to go for a run in a little social event and have a fundraiser for a charity, you know, those kind of stuff, you know, giving out stuff during a hard time, sponsoring events and stuff like that. That's really a good thing to look at, and it kind of shows where the company stands in terms of who they are and what kind of things they support, and if they support the society and the community. So that's really, really important. So those are the 6 things that I really want you to have a look into when stock picking. I know it's quite a lot of things and it does take time, so this is exactly what I was trying to say. It's not easy to pick stocks properly, but it is very, very rewarding, because at the end, 10 years later, 20 years later, these stocks might be well over the values, you know, of what you were thinking. And it all comes down to who did the research the best, and did the company follow through with that, with all those strategies to keep in mind to grow and dominate markets. So that's really important. So thank you all for listening out today. If you like this video, give me that thumbs up, put a comment down below what you thought, subscribe to the channel and put the bell notification. I know a lot of you who are not subscribed but still watch my videos. Please remember to hit the subscribe button. It doesn't cost you anything, and it helps me and it helps my channel to grow. So that's that. And until next time, I will come back with a live video or something like that. Till then, see you around.